Hi, Karen Deis here, publisher of Mortgage Currency magazine, and this is the January 2014 Rule and Regulation Update. You know what? It just seemed like yesterday that we've written tons of articles in regards to ability to repay and QM and appraisals and the Consumer Finance Protection Bureau. But the day has finally arrived, and you won't find a whole lot of articles in regards to this in this issue, other than HUD finally came up with their version of QM. Now what they did is it's pretty much the same as everybody else's, except there's certain sections of the housing programs that have been excluded. So that list is included in the updated article. Now what you're going to find are 11 new articles in this issue, but there's only a couple that I really think that you need to know about. The first one being, this is a biggie now, social media monitoring rules have been finalized as of December 11th, 2013. Now the final version has 4 major changes to that. So most of them are good changes, including the one where companies don't have to monitor an employee's personal social media pages unless that employee is using it to attract business. So when you read this article, what we did is we compared the proposed rule to the final rule and marked that in red so you know what the changes are. But check out the 4 major changes. Next, one of the big changes are FHA, where the borrowers are buying a HUD repo and using FHA financing. They may now have to pay for an appraisal. Now, as you know, HUD repos usually already have been appraised, and in most instances, the borrower doesn't need to pay for an appraisal. Well, as of February 5th, 2014, HUD REO buyers may have to pay for an appraisal if there are 5 reasons to do so, and that is listed in the mortgagee letter. So, one of the reasons might be that the HUD appraisal is more than 120 days old. The buyer is going to have to pay for a new appraisal. Now, with that being said, real estate agents need to know about this as well, so we created a mortgage talking point flyer for you to share with your real estate agents, and you can print it or cut and paste it and put it in an email notice to them. Now, as usual, VA has finalized their loan limits for 2014, but here's the dealio. You're going to have to take the 2014 loan limits, compare it to the 2013 one to determine what has changed, what has increased, and what has decreased. So we've provided both lists for you to compare. Fannie has issued their usual updated selling guide updates, but kind of hidden in the back of the announcement was a section in regards to the new instructions on how to complete a 1003. Now, a little history here. Along with the 1003, there has always been some backup documentation and some instructions on how to complete certain sections of the application. The last version was back in 2010. Now there's an updated version as of December 2013, and what they've done is they've clarified 5 items that you're supposed to, now cover. One of them has to do with showing negative and positive rental income and how you're going to show that on the 1003. Now the weird part is that we can't find the 2010 version of the instructions to compare it to the 2013 version. Plus, there was a couple items that are mentioned in the Fannie Mae announcement that don't show up on the instructions. So my recommendation is go to your LOS provider, ask them if they've updated the 1003, and make sure that it's updated in the system. Now remember, one of the benefits of subscribing to Mortgage Currency is that we provide a marketing component to update your real estate agents and consumers on the rule changes. So in this issue, you're going to find 1 mortgage talking point, 3 Facebook posts, and 9 tweets that are ghost written for you. So thank you so much for viewing, and remember that getting a loan approved and closed these days is rocket science.